welcome to ET Now. You're watching Your Trades with me, Kanishka Sarkar and Snehi Shah, where we'll get you all the top developments from the world of business. Let's get started with the top stories then. Snehi, the Nifty did end on a high note today, up almost 1%, but for the week it's down about 0.5%, ending just shy of that 24,900 mark.
Absolutely, Kanishka, one would have hoped that the recovery that we've seen in the market today would buoy the Nifty towards the green for the course of the week if you take a look at the weekly basis. But unfortunately, that's not been the case. And like Kanishka mentioned, we've ended with a 0.5% cut, almost 0.6 to be precise, on the Nifty, a 0.7% cut on the Nifty mid-cap over the course of the week, and 0.4% uptick coming on the small cap. So the small cap place, the side of the market, albeit very flat, has been the real shining sector. Over the course of the week, Nifty Realty, no doubt, up and away, 2.6% higher for the course of the week. PSU banks and metals have done pretty okay for themselves over the course of the week. Nifty Bank and Energy was flat, but steep cuts coming in from auto, IT and FMCG and pharma as well. So the defensives largely were on the losing end, and PSU banks and realty and metal, they have ended in the green over the course of the week. So that's what the breadth has looked like. If you take a look at top news, we've had a lot of action coming in over the course of the week, be it earnings, be it what's happening in the US in terms of bonds, Trump's tax bill. So much is happening. You have Trump's tax bill that spurred fiscal fears in the US because it aims to add on to the US debt. Remember, we also had a Moody's downgrade coming in on the US bonds and US debt. So that is something to watch out for. ITC zoomed on the back of steady quarter 4. Honasa shown in today's trading session on the back of a beat versus expectations for quarter 4. The cautious FY26 guidance that was shared by Sun Pharma dented that stock, and that's what's weighed on the Nifty Pharma index on an overall basis as well. Sensex reject to be taking place from 23rd of June. You have Trent and BEL in, and Nestle and Indusen that will be going out. The Supreme Court rejected Airtel, Vodafone Ideas, AGR waiver. Please, so just keep count of the stocks that I'm mentioning, because so much has happened over the course of the week. Next up, let's talk about Protean Eager, a 20% lower circuit coming in on Monday when that stock and the company were excluded from the government's PAN 2.0 plans, but they have revived from that low. DV's Labs hit the life high on stellar quarter 4 earnings over the course of the week, and IndusInd Bank, that stock was a total shock on how it rebounded after its numbers came out despite a new accounting discrepancy that was factored in. ABFRL, that stock saw a demerger coming in. You had a lot of other news flows around the PMO, SEBI, India's diplomatic relations, India-U.S. bilateral relations, tariffs. So much has happened over the course of the week. Basically, to sum it up, we've had a quite adventurous week, if you could call it that, but Nifty has ended 0.6% lower. Well, on that note, let's welcome Ajay Bagga, market expert, who's joining us on the show. And we also have Rajesh Pal, we are Head Technical and Derivative Research at Axis Securities, joining us. Good afternoon to both you gentlemen. And Rajesh, I'll come to you first. Given the kind of moves that we've seen over the course of the week, one would have hoped to end at least flattish or slightly positive on the Nifty, but that has not been the case. And this has been the second week of consolidation coming in, even though it's very nominal. Give us a sense of what next week's trading session looks like us, because we are also approaching the fag end of the earnings season.
So it was very volatile week for the indices. We have witnessed that, for Nifty, 25,000 acted as the major supply zone, as a major call concentration was placed at around those level. And when Nifty was, attempting to give breakout about 25,000, most of the call writers were, adding the position around those strike only. That has created some pressure on the indices from higher level. But in this correction, Nifty has almost tested its 20-day moving average, and we have seen very sharp recovery from those level. Even for the Bank Nifty also managed to hold about 20-day moving average in this corrective move. So both indices are well placed above near-term moving averages. So I think that clearly indicates that, yes, there is a strength in the indices for near-term perspective, and buy on dip should be your strategy till 20-day moving average is intact for both the indices. So for Nifty on the downside, we believe that, till Nifty is holding about 24,700 mark, I think trend is likely to exhibit on the bullish side. And once Nifty manages to cross about 24,900, 950 zone, Here we could see a good amount of short covering action, and then possible rally can extend further to 25,100, 200 zone. As in the coming week, we are going to enter in the expiry week for the series. So I think it would be very interesting to see whether Nifty able to give breakout of this 24,900, 950 zone or not. Uh, for Bank Nifty, till Bank Nifty is holding above 55,000, there is a possibility that Bank Nifty may also manage to give breakout above 55,600 level. If this happens, so I think here also we may see some short covering action to trigger, and then possible rally can extend to 55,900, even 56,200 level also. In today's session also, we have witnessed some of the private bank has shown buying interest, as well as PSU banks are also witnessing some buying interest. So I think Bank Nifty may also, give good kind of, rally in the coming week. So both indices, buy on dip should be a strategy.
All right, thank you. Mr. Bagal, let me now come to you. I want you get your sectoral view. Just like Snehi mentioned earlier, we are at the fag end of the earnings season. Given how numbers have been so far, which sectoral plays are looking more attractive to you?
Yeah, in terms of institutional overweight, financials are a clear winner. IT remains underweight. Most of the institutional players are underweight on IT. Then again, the domestic focused sectors are doing better, and even the funds are positioned overweight on them, be it consumer durables, be it auto, be it construction and industrials. I think those are some of the sectors that are seeing an overweight. We must recognize that our markets have gone through the ringer. They have seen a 4-day kinetic action with a hostile neighbor and come out well from that. All the global sentiment soaring, which has hit our markets. Despite that, we have seen a lot of resilience in our markets. My personal thesis is that Trump will settle at 10% universal tariffs globally in the next 2 to 3 weeks, and that will lead to a big upsurge in the risk sentiment, and our markets are well positioned. What is showing up, and I don't know if Rajesh has also studied it, our markets have become more volatile than comparable Asian markets. So we have fallen more and we have gained more across this week than what our Asian peers have shown on the same news. So Indian markets are showing more volatility, though the VIX is not showing that, but the price action is kind of reflecting that. So I would say resilient market shaping up for an up move, and buy on dips very much.
And well, on the weekly basis, the VIX is up 4.5%. So maybe that's where the hidden moves of the VIX are actually coming up together and accumulating over the weekly basis. Because, like Mr. Baga pointed out, we have seen volatility in the market. But Mr. Baga, once again, I want to come back to you and get a sense of everything that we are seeing on the US front. First, there's a divergence that's clearly being seen between the US bond yields as well as where the dollar index is headed. On the other hand, you have the Moody's downgrade coming in. Despite that, you have Donald Trump that's barely been able to pass his tax bill that adds on to US debt. What are you making of all of these developments, and how is this going to have an impact on the overall world? Because like we know, it's popularly said, when the US sneezes, the whole world catches a cold. When is the US going to sneeze when it comes to their debt levels?
I think that's a very good analysis. Normally, if rates go up, the currency should have gone up. Rather, we saw the dollar going down. Rates were going up more out of an alarm at the Trump tax and spending bill that it will add nearly $5 trillion more over the next 10 years to the US debt and deficit. Already the deficit is running very high, and the tariffs are really not working. Though they celebrated $16 billion coming in April, but they were running at $8 billion already. So going from about 3% tariffs to a weighted average of 19% and getting just a doubling of the tariff as against a target of 600 billion. You are running at about 180 to 200 billion right now. So the tariffs will not make up for the tax cut revenues. When the economy is doing fairly okay, when there is no need for a tax cut, Trump has brought in a tax cut and more for the wealthier sections and the corporates, and cutting back spending on the welfare part. So the Democrats are saying that nearly 1 million jobs will go based on this bill. We have no idea of that. What we are clear is, one, the world is very afraid of tariffs, and Trump will bring in a 10% and settle it for a majority of countries. So there is a relief rally brewing. Second, the structural issue with the US debt and the fiscal deficit stays, and there are no easy answers to that. So it will keep working. For now, 80% of global trade is still denominated in dollars. It's still the reserve currency for a large portion of the global reserves. So that will stay till it stops working. So we have to wait that out. I'm not calling an early end to the exorbitant privilege that the US dollar is enjoying. I think that continues for another 10 years, if I may say that. The third big part is the $33 trillion are sitting in the US market, invested by global investors in bonds and stocks. A small portion of that will start moving out. And where does it go? It will go to Europe, it will go to Japan, it will come to emerging markets. And India, within the emerging markets, we will get a good 7-8% share of the emerging market flows. So again, I think that's another trend that will benefit us going ahead. And fourth is our domestic strength overall, which we have spoken a lot already. That's a well-known thesis. Our issue is the US, all the chaotic policy turbulence which has hit the markets as well. I think that gets resolved to some extent over the next 2-3 months. What will not get resolved is the US debt. That will stay. So we are not seeing US yields coming down sharply. We are not seeing the Fed cutting rates, but we are seeing the RBI cutting. And since this week, the chatter on the street more is that 50 basis point rate cut coming from the RBI in June. If that comes, it's a big leg up for the Indian economy again. It will be a big monetary stimulus. Already 8 lakh crores RBI has put in terms of liquidity. They are about to give 2.5 to 3 lakh crore dividend to the government in the next week or 10 days. That's again a liquidity infusion into the market. So I think markets are setting up for a leg up in the Indian markets at least.
Right. Thank you, Mr. Baga, for that view. Rajesh, now let me come to you and ask you, I'll keep it with the US tax policy space. Since we had the bill coming yesterday overnight, I want to understand your view on the clean energy space. We did have the stocks, the companies that do have exposure to the US clean energy space, they did come down a lot today, seeing a lot of downtick following the development. So what kind of levels should we be tracking for those kind of companies going ahead into the next week?
No, I think in the energy space, we have witnessed, profit taking from the higher level. And I think this is likely to continue as on the higher side. Nifty Energy Index is, facing the resistance at around 35,600, 700 zone. So till this levels not taken out on the higher side, I think some profit taking would be there around these levels. So 35,600, 700 is the immediate hurdle for the indices. I think on the energy basket, a lot of stocks are witnessing supply pressure at higher level. Stock like, if we go with the stocks like ONGC and other stocks, they are all facing the resistance at immediate basis on the near-term chart. 248 to 250 is the immediate hurdle for the ONGC. Until the stock not crosses this level, we may see some consolidation or some downtick in this counter. So maybe on the downside, around 230 would be the next level if stocks not crosses 248. So this space may attract some profit taking in the near-term perspective. So wait for this supply pressure to settle down. And then on the lower side, again, one can review these stocks basket.
Okay, so that's the take coming in on the Nifty energy space and some of those oil and gas counters. But Mr. Baga, I want to come back to you and get your sense on the FII behavior and the FII activities that we've seen over the course of the week, particularly on 20th of of this month, 10,000 crores of selling is something that we have seen. This is an amount that we don't see very frequently. Does this indicate that the FIIs and the global players are now losing confidence in the Indian securities, or do you believe that this is just a one-time blip and the confidence is still intact?
I think confidence is there. We saw 10,000 going out. Next day, we saw a positive of 2,000. The very next day, minus 5,000 again. So I think it's more the screaming that's happening in the bond market, and especially the longer dated Japanese bonds. What that means is that the carry trade becomes unprofitable. If the yen is appreciating and also the JGB yields are going up, the Japanese government bond yields are going up, then money starts coming back home. So I think it could be part of that we saw in terms of the outflows, the 2 big days of 10,000 and 5,000. But middle of that, we did see a 2,000 crore net inflow. On Friday, we saw some amount of short covering happening. And we saw the rupee strengthen as well, which could be a pointer that Friday FI flows were better. So too early to call that. The trend is towards emerging markets being beneficiaries of the dollar weakness. We see the DXY dollar index going down from 99, another 5 to 10% over the next 6 months is what we are looking out for. I think that will happen. And you could see India as a beneficiary of the FI flows turning around. So I would not call time on FI inflows right now based on the previous week's performance. And we'll wait and see. But yes, it is a problematic phase when the Japanese rates go up or the yen appreciates, then the carry trade on the margin starts getting impacted.
Okay, thank you, Mr. Bagga, for that. Now, Rajesh, now let me come to you. I wanted to understand which are your top picks for the day.
Two stock idea both on the buy side. First one is from the insurance space, that is ICICI Prudential. If we look at the overall behavior of insurance space, most of the stocks have delivered a good amount of buying interest in this week. Looking at the breakout on ICICI Pru on a weekly chart, we believe that here we could see further more momentum in the coming week, and possible target towards 668 to 670 we can witness. So ICICI Prudential is buy with stop loss of 630. The second stock is from the capital goods space, that is ABB. After a significant correction, stock has spent almost 10 to 15 week in very narrow price range. And after the accumulation of 10-15 week, now stock managed to give breakout of this consolidation range. Looking at the breakout, we believe that ABB can extend its move on the higher side. We are projecting target towards 6140 with stop loss of 5900.
That Rajesh is liking at the point. But Rajesh, I also want to understand your take on the news flow that we've seen over the course of the week, wherein we are hearing some buzz that the SEBI may give NSE not to move its expiry to Tuesday. Give us a sense of how this would pan out for the market in terms of flows, any major impact to the overall flows, expiry dates, how is it going to pan out for our markets overall?
So I think change in expiry days would also, the whole movement of the market will, stick to one day if expiry days, move to the one date only. So I think that may create some kind of, volatility in the market because there is still multiple expiries for the weekly options. But if it's on the same day, so I think that may attract a higher volatility in the market. So that would be the immediate impact. But I don't think it will create major changes in terms of behavior of the traders. But yes, volatility would be little higher on the same day if the expiries moves to the same date.
All right. Thank you so much, Rajesh, for that view. But with that, we are completely timed out on this edition of Your Trades. Thank you so much, Rajesh and Mr. Ajay Bagga, for joining us and helping us with your views out there. With that, it's a wrap on this edition of Your Trades. See you. More news and updates coming up on the other side.